Ever wonder why your business credit application keep getting denied? It might just be because you have the wrong lenders reporting on your credit profile. So let's dive into how you can fix this and how you can secure the business funding you need to start to grow or to scale your business. In this video, I want to share with you 7 lenders that's blocking your business credit approvals. Plus, I want to share with you some tips on how to put a permanent stop to these lenders from holding you back from securing up to $100,000 in business funding. So here's the deal. If you've been following me, the page, if you're not, make sure you like and subscribe. But you should know by now that 95% of business funding, not business credit, if you don't know the difference, make sure you go watch my other videos. But business funding is based off your personal credit profile. See, lenders closely examine the trade lines you have on your credit profile to determine your credit worthiness. Essentially, your trade lines paint the pictures for these lenders to decide whether or not they want to lend you any loan or give you that line of credit or that unsecured business credit card. See, when you're building up your personal credit profile, you want to closely examine the trade lines that you have on your credit report. So first thing first, you have to pull your credit report, look at the trade lines you have reporting. If you have a whole bunch of subprime lenders on your credit profile, that's a recipe for disaster. You're setting yourself up for failure. Okay, so let me break it down this way. Did you know there are 5 different types of credit levels? Let's quickly run through them. Okay, so let's start with the highest scoring level. The highest scoring level you can have is called a super prime level. This means you have to have a 720 FICO score or higher. The next level under that is called a prime level. This means you must have a 660 FICO score all the way up to 719 FICO score. The next level underneath that is called a near prime level, where you must have a 620 FICO score all the way to a 659 FICO score. The next level under that is called a subprime level, where you must have a 580 FICO score all the way to a 619 FICO score. And the last level underneath everything is called a deep subprime level, where you have a 580 FICO score or lower. So these levels are used to determine your risk factor. This means if you have a high FICO score, obviously your terms are going to be very good and your interest rates are going to be very low. On the opposite end, if you have a low scoring FICO score, then your terms are going to be really bad and your interest rates are going to be really high. Just makes sense that way, right? But here's what I want to focus on. I want to focus on the subprime loans, the subprime lenders, the subprime credit score level. That's what I want to focus on right now. For example, ever sat at a car dealership 4 hours while they ran your credit report multiple times, desperately searching for a subprime lender to finance your car loan? Talk about frustrating. That's a really frustrating experience. I've been there. I'm sure you watching this, you probably been there. And the end results, you have to sit there for that long time to only find out you either need a co-signer or you got to pay this ridiculous high down payment and your interest rate is going to be like 30% or higher. You don't want to put yourself in that situation, but I'm sure you've been there. I know I've been there before and a lot of other people have been there. That's what you don't want. But here's the thing. When you do get approved with a subprime lender, let's say Santander. When Santander reports that trade line on your credit report, it paints you as a high-risk borrower in the eyes of the lenders. Why? You might be asking. Because if you constantly put subprime lenders on your credit reports, you are opening the door for only other subprime lenders to report on your credit report. This is called comparable credit. See, here's what you probably don't know. Lenders are very competitive. So for example, if Chase sees that American Express has a $10,000 trade line report on your credit profile, then most likely Chase is going to give you a $10,000 trade line or higher report on your credit report, because it's all about competition and they like to do something that's called comparable credit, which I stated earlier. So this sets you up in the future. If Chase is a subprime lender, American Express is a subprime lender, then the next banks you're going to qualify for, let's say a Bank of America or a PNC Bank, is another prime lender, then you're going to most likely always get prime lenders reporting on your credit report. Are you tracking? And this is fantastic news when you're trying to get business funding. Now, let's get into the meat and potatoes. Here are 7 lenders that you want to stay away from, or 7 lenders that are blocking you from getting business funding. Let's dive into it. But before we get into that, this video is sponsored by Aura. Do you know what's the fastest growing crime in America is today? It's identity theft. Imagine trying to log onto your email only to see that your password has been changed. Then you start to get weird notifications from your bank and credit cards only to find out that all your personal and sensitive information has been compromised. If you think this can't happen to you and your family, just know in 2021, over 23 million Americans were victims to identity theft, costing them a combined $16 billion. This is why we are excited to partner with Aura. Aura is the #1 identity theft and financial fraud protection. Aura monitors the dark web and alerts you of any of your passwords and accounts that has been breached. Crazy enough, using Aura, I discovered some of my information was floating around in the dark web, and the app will show you when and where the breach happened. In addition, Aura allows you to set spending alerts, and then they notify you of any suspicious transaction. Aura is 4 times faster than any of its competition in alerting you if someone is trying to open a credit card or obtain a loan in your name. And remember this, every 22 seconds, someone becomes a victim of identity fraud, so don't let it happen to you. Now, click the link in the description and try Aura for free for 2 weeks and see if it's any of your or your family's personal information has been compromised. Start your free trial today, and when you try Aura by using the link in the description below, also know that you are supporting this channel. Thank you. So the 7 lenders I'm about to give you is primarily subprime lenders. You typically go after these lenders when you have negative items on your credit report, such as charge-offs, collection accounts, car repossession, evictions. When you have all these items reporting that's negative on your credit report, so you can qualify for prime lenders because it's very challenging due to your credit profile and your low credit score. So you go after the subprime lenders, not realizing that the subprime lender is a detriment when you're trying to get business funding. So let's go over the 7 lenders that's blocking you from getting business credit approvals. The first lender on this list, I want to start with Credit One. Believe it or not, Credit One is probably the best subprime lender on this list. First, Credit One, you can get an unsecured credit card with Credit One. It reports to all 3 major credit reporting agencies. You can also do a pre-qualification, which is good before you officially apply for the card. You can see if you pre-qualify without getting that hard inquiry. So that's not bad. However, the Credit One credit card comes with a 29% interest rate, and you have to pay an annual fee of $95. And it's a subprime lender. So be very mindful of that. Remember, having subprime lenders only results in other subprime lenders. The second lender is called First Premier Bank. Now with First Premier, you can get a secure credit card or unsecured credit card. Your credit limit only gonna max out about $700, which is really bad when it comes to trying to get business funding. And I'm gonna explain why that is towards the end, so make sure you stick around. But you capped out at a $700 credit limit. Your interest rate is going to be around 36%. It does have an annual fee at $125, so be mindful of that. So again, it's a subprime lender. It does report to the 3 major credit report agencies as well. Third on the list is called Indigo Platinum MasterCard. It's issued by Celtic Bank. You can get a unsecured credit card, but again, the interest rate is going to be extremely high. Your credit limit is going to be extremely low, which makes it challenging to get business funding, and it's a subprime lender, so be mindful of that. The 4th lender on the list is called Mission Lane Visa. Again, subprime lender. You can get an unsecured credit card, max you out probably at $500. It's a subprime lender, so be mindful of that. It reports to all 3 major credit reporting agencies. In addition to that, you can do a pre-qualification, but the interest rate is going to be extremely high for this card too. Next on the list is Milestone MasterCard, which is issued by Bank of Missouri. It reports to all 3 major credit report agencies. Again, a credit limit up to $700 when it comes to that limit. Interest rate is going to be extremely high, and you can do a pre-qualification for this card too as well. Again, it's a subprime lender. Next on the list is Surge Platinum MasterCard. You can get up to $2,000 when it comes to this prime lender, which not bad, but again, I'm gonna explain why you need higher than that. Interest rate is gonna be high. The credit limit is not so good. It's a subprime lender. You got an annual fee, be mindful of that. And the last lender on the list is Destiny. So Destiny, you can get a unsecured credit card. The credit limit is going to reach anywhere between maybe $300 to $700. APR is going to be extremely high, 35%, somewhere around that. You also dealing with a subprime lender, so be mindful of that, and you will have an annual fee. So those are the 7 lenders that's preventing you from or blocking you from getting business credit approvals. So if you ask yourself why that is, right, why all those lenders will stop you from getting bank approvals? Well, because when Chase look at your credit profile, when Bank of America look at your credit profile, PNC, US Bank, these are prime lenders. So if they decide, hey, we want to lend to you, but then they look at your credit score to see what level you are at, then they look at your credit profile to see what lenders you have on your credit profile, they will not lend to you because they see that only subprime lenders are lending to you right now. So why would a prime lender like Chase lend to you? Does that make sense? Well, you might be thinking, London, I got a mortgage loan with those subprime lenders on my credit report. That's fine, because a mortgage loan, unsecured business credit card, business lines of credit, term loans, these are all different products. So yes, you can get a mortgage loan if your personal credit is properly positioned. But getting a mortgage loan compared to trying to get a business line of credit or a business loan, your personal credit profile has to be positioned differently than you seeking a business loan. So again, it's all based off the data points that's reported on your credit report. This is why your credit score is not that important as the data on your credit profile. Now, let's go over some tips that I promised you early in the beginning of the video. Here's how you get around only qualifying for subprime lenders, because the goal is to qualify for prime lenders based on the information that I gave you before. So what we want to do, we want to remove the negative items that we have on our credit profile first. The evictions, the collections, the charge-off accounts. We want to remove those or dispute those from our credit report. We also want to pay down any high balances that we have on our credit card so we can lower our credit utilization. In addition to that, we want to pay our bills on time and over a period of time. All credit is your ability to pay your bills on time over a period of time. Essentially, that's what credit is. So if you do those things, you can skip the subprime lenders. The reason why you go into these subprime lenders is because you can't qualify for prime lenders because of those negative items or high credit utilization or late payments you have on your credit report. Now, once you clean up that information, now what you want to do is go to prime lenders such as Capital One. You can start with a Capital One credit card. In addition to that, you can go with a Discover credit card, right? So now you can go to Discover, which is all considered prime lenders, but they lower tier prime lenders, but they still consider prime lenders. Or you can go this route if you can't get an unsecured credit card with Capital One or Discover. You can get a secure credit card with Capital One or Discover or Bank of America, right? You can go the secure route, which is better than have subprime lenders reporting on your credit report. So my recommendation, if your credit is not all the way in position, go to Capital One or Discover, or you can get a secure credit card, which is better than getting those subprime lenders reporting, right? So the whole goal is to have prime lenders on your credit report, not subprime lenders. Now, I want to hear in the comments below, what do you think about subprime lenders or prime lenders? If you have any questions, make sure you hit the comment below. Make sure you like and subscribe. If you're not following me on IG, Mr. London, make sure you do that. See you on the next video.